All right, today we're digging into the pretty incredible story of Sen Yue Holdings. We're going to break down their latest financial results, and believe me, it is a dramatic tale of a huge pivot, some absolutely explosive growth, and of course the new risks that always come along with that kind of success.
So here's what we're going to cover. First, we'll get to know Sen Yue a little bit. Then, we'll unpack that massive swing in their revenue and profit. After that, we'll do a quick health check on their finances. And finally, we'll take a peek at what the future might hold for them.
Okay, first things first. To really get a grip on this comeback story, we've got to understand the company behind all these numbers. So who exactly is Sen Yue Holdings? What is it they actually do?
Well, the company basically operates in 3 different areas. They make metal parts, like speaker nets. They also do this specialized thing called electro-deposition coating. And then there's the third one, resources recovery. Now, I want you to keep a close eye on that last one because, as you're about to see, it is the absolute star of this show.
All right, let's get into the numbers because this is where it gets really interesting. The headline figure from their latest report is, well, it's staggering. A huge jump in revenue. But the real story isn't just how much it jumped, it's where all that new money came from. Just look at that. For the full 2025 fiscal year, Sen Yue's revenue more than doubled. It shot up by an incredible 107%, hitting 69.6 million Singapore dollars. You know, a jump like that doesn't just happen. Something fundamental had to have changed inside their business.
And this chart, wow, this chart tells the whole story perfectly. I mean, look, the ED coating business, it grew by a respectable 10%. The metal components business actually went down. But then you look at resources recovery. That's the division that deals with recycling materials from things like EV batteries, and it was without a doubt the engine for all this growth. Its revenue just exploded by 188%. It went from under $19 million to almost $55 million in just 1 year.
So here's the key takeaway. This wasn't some company-wide rising tide that lifted all boats. No, this was a targeted explosion in one single high-demand area. They plugged right into the booming market for recycled battery materials, specifically this stuff called black mass, and it just completely transformed their top line.
But here is the million-dollar question, right? All that extra revenue is great, but did it actually translate into profit? I mean, it's one thing to sell a lot more, but it's another thing entirely to actually make money from it. So let's check out the bottom line.
And there it is. This is really the heart of the comeback story. In 2024, Sen Yue had a pretty significant $12.1 million loss. Just 1 year later, they have completely flipped the script, swinging all the way to a profit of about $177,000. Now, that might not sound like a huge number, but going from that deep in the red to being in the black at all, well, that is a monumental achievement.
So how on earth did they pull that off? The secret is in a key financial metric, their gross profit margin. Think of it this way. It's basically a measure of how profitable their core business is before you factor in all the administrative and other corporate costs.
And what's really fascinating here is just how much it improved. Their margin more than tripled, jumping from a pretty slim 3% to a much healthier 9.2%. According to the company, this was mainly because metal prices were less volatile. That meant they didn't have to write down the value of their inventory nearly as much as the year before, which gave a direct boost to their profitability.
Okay, so making a profit is fantastic, but that's just one piece of the puzzle. To really see if the company is on solid ground, we need to look at its overall financial health. So let's pop the hood and check out the balance sheet.
At the end of the year, Sen Yue had a positive working capital of $8.63 million. And seeing a positive number here is a really, really important sign of a company's short-term stability.
So what does that number actually mean for them? Well, to put it simply, it's a signal of a healthy financial position. It means they've got more than enough short-term assets, like their cash and inventory, to cover all their short-term bills. It gives them a nice cushion, you know? It's breathing room to manage their daily operations and make investments when they need to.
So the turnaround is clear, it's impressive, and it's definitely backed up by the numbers. But the big question now is, can it last? Let's take a look at what the company itself is saying about the next 12 months. For their star division, resources recovery, the opportunity ahead is huge. I mean, with more and more electric vehicles on the road, the supply of old batteries that need recycling is just going to keep growing. That's a massive tailwind. However, and this is a big however, their profits are now tied directly to the wild roller coaster of global metal prices. An oversupply of a key metal like nickel could totally squeeze their margins and turn a very profitable business into a risky one seemingly overnight.
Meanwhile, their more traditional ED coating business, while it's been stable, is facing its own set of challenges. The company is pointing to a cooling auto sector in its main market of Malaysia, and on top of that, you have the challenge that everyone's facing, rising labor and energy costs. So there's pressure on profitability coming from that direction too. So what you should really take away from all this is a fascinating story. It's a company that has successfully pivoted into a high-growth, future-focused industry, and they've engineered an absolutely incredible turnaround. But by doing that, they've basically traded one set of challenges for another, tying their fate to the notoriously volatile global commodities market. And that leaves us with the big question: is this new model of success actually built to last? That's our explainer for today.